All right. So you came from the first video, you watched it, you like, okay, I understand what these candlesticks mean now. I understand are kind of what I'm looking at, and I would like to get more in depth, right? You came to the right video, by the way. In this video, if you ever looked at the charts and wondered why price keep bouncing from same places, you're about to find out. I'm going to teach you support, resistance, and why it's one of the first concepts every trader should learn. Feel me? If you're new to the channel, make sure you like, share, subscribe. If you're old to the channel, make sure you like, share, subscribe. Again, this will be the last time you see my face, so if you think I'm pretty, like. Thank you. Now, to give you guys the best possible examples and whatever you call them, I have both charts on here. What I trade, what you guys trade. And both of these are on my 1 hour. Before we get to the chart though, we must get to the wordplay first. Okay, so the first thing first, what is support? Support is an area where prices struggled to move lower in the past. And what is resistance? Resistance is an area where price has struggled or is struggling to go higher. And to give you a brief example, okay, so let's say we were to take this basketball right here and decide we were going to bounce it through a narrow corridor, right? Support would be you throwing it on the floor. Resistance would be it bouncing off of the floor and hitting the roof. Hitting support, hitting resistance, hitting support, hitting resistance, hitting support, hitting resistance, hitting support until, it fizzles out, whatever. Cool? So, that's your example of support and resistance. So, support is basically the floor, resistance is basically the roof. And price bouncing between roof and floor is price bouncing between your support and resistance levels. Okay? So then you want to ask yourself, why does price react around these areas? You feel me? Why, when price would come to these support or resistance areas, why would they move there? If buyers believe price were to come to this area and shoot up, or buyers believe price comes to this number and it's the best possible number they're going to get, many of those buyers are interested and they're going to put their money in there again, which then makes the market react in a way to where it will push price up. It's pushing price up to tell you people bought at this area. Yesterday's price is not today's price. The same goes for sellers. If price decides it shot up and all the people that got in from down here that bought it up decides, okay, instead of 41, 45 is where I would like to get it at. I've made my money. I'm going to take it out. I don't think it's going to go any higher here. Price has reached its ceiling, and I don't think it's going to make any more money. So we'll go ahead and take our money out, which then has a negative effect, which makes price hook curls and drop. If enough people do it, it affects price. You know, this is one of the biggest mistakes beginners make. They draw one perfect line across the chart and expect price to reverse at that exact level. Support and resistance are zones. Price might reverse slightly above this area or slightly below, and that's completely normal. Instead of drawing thin lines, start by thinking boxes or zones where price has repeatedly reacted. With that being said, here's a mistake that normally costs a lot of new traders. They will come to the charts and they would see price touch their area and they decide, okay, price has gotten to my area. What I'm going to do is I'm going to immediately sell when it hits that line, all right? But then price decides to push completely past your line. And now you lost the trade for no reason. Or they see price come down here and they say, I'm going to buy right here, and price does this, all right? Support and resistance aren't always entry signals. They're locations where you should pay attention and see what price is doing in this area. You feel me? Always wait for price to show you what it wants to do before making any trading decisions. Everything I draw over here will be drawn over here automatically. Okay? I'm going to explain to you why I draw them here, and you're going to see how it forms over here. So first things first, we're going to find support. For me, if you're looking at my strategy, support is anywhere in areas where price rejected and basically you visually see it's a floor, right? So for me, if I come over here and I do this, this looks like a floor over here. Why? Price came low, 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 low. This is the lowest it's went, all right? And it was basically reacting as if price did not want to go lower than here. You can see, same thing. Cool. When it comes to the wrinkles, I look for multiple peaks to then support my answer. Cool. Let's give ourselves a roof. There's many roofs. Let's do this one up here. Why? Because price looked like it didn't want to go past here. If we want to make it more noticeable, we can go here. We can go here. Okay, so I made sure I drew out all my boxes, and we're going to go back and look. If you noticed, where there's roofs and floors, they all look like areas where price has came, bounced, and showed some type of rejection. Look, bow, pow, boom, boom, boom. It's showing you price do not want to go above or beyond that area. You see? You see? So forth and so on. But yes, I like to trade wrinkles because it shows the peaks a lot more cleaner than it does candlesticks, but it's still similar. Now, in the next video, I'm going to go ahead and break down market structure with you guys. We're going to learn how to combine market structure with support and resistance to then make our direction. You feel me? If you're new to the channel, make sure you like, share, subscribe. If you're old to the channel, make sure you like, share, subscribe. Thank you. Peace.